Traders at UBA said they expect the bearish sentiment in the bond market to persist despite seeing demand at the mid to long end of the curve. Chuka Nwachukwu, head of ALM and balance sheet management at UBA, joins me for a market update. Chuka, thank you so much. Always a pleasure to have you on the show.
Thank you, Esther.
Well, let's get right to it. Bring us up to speed on trading so far today, starting with the money market.
It has been really liquid from the fact of last week, where over 900 billion came into the system. We've seen a system liquidity move between 550 billion to over 800 billion, and so that has actually affected trading in the market. While we see bearish sentiment on those who mixed reaction actually. We've seen bearish sentiment for those looking to take profit for month-end income. Then, of course, on the other hand, people who are trying to invest some of this excess liquidity, that has also brought in bullish sentiment.
Let's talk also about the Treasury bills market. If you haven't talked about that, I see demand for long-dated maturities.
Yeah. So on the T-bill side, we've seen rates. The one-year auction that came out about 12.15 is currently trading around 10.5 levels. This is also in line with the liquidity in the system. But the thing about the TB market this week has really been quiet. I guess it's as a result of the uncertainty, because the market really, direction of market really isn't clear yet as regard where the what CBN intend to do in terms of liquidity. On one hand, a lot of people feel that the pronouncements on the LDR, will affect the liquidity in the system. So people are very wary of what they do now, wary of taking position, and that has actually affected the T-bills market.
All right, let's expand this conversation, talking about funding the budget. I mean, there have been reports that we might need to obviously borrow even perhaps heavier than we thought. And of course, we know that the bulk is going to be on the domestic side. Talk to us about what this means for the market, the rates, and of course, we know that that also has implications for debt service for the fiscal authorities.
Yeah, that's why you've seen a bearish sentiment in the market. That's why I've also seen that a lot of traders are still very skeptical on what direction to tow. This is because, like you rightly mentioned, the government is going to borrow heavily. Majority of it is going to come from the local market, especially on the bond side. And so there are also other expenses coming up. The president just announced about 500 billion palliative, just to cushion the Fed on the price fuel increment. And so these are expenses that were not budgeted for at the beginning of the year, but of course I'm sure that the president will send a supplementary budget to accommodate some of these expenses. So that has actually played into the sentiment in the market, and that is why we've seen that people are a bit wary, in as much as the market is liquid. Normal thing is, once market is liquid, you invest some of this liquidity into the fixed income space. However, people are just cautious, knowing fully well that government is going to borrow heavily, and this will make the yield to go further up.
Right. Thank you so much, Chuka, for bringing us up to speed. Appreciate your time on the show today. That was Chuka Nwachukwu, head of ALM and balance sheet management at UBA, bringing us up to speed on trading at the fixed income market.